Hey folks, everything you need to know about lines of credit. We're going to be talking about how you go about getting a line of credit, why you want one, even if you do not like debt, and where it becomes prevalent in your own personal life in this interest raising environment, how that's going to affect your line of credit, and in the past, how I've personally used credit to actually leverage into investments and make a pretty healthy return. We're going to talk about some of the risks that are imposed doing so as well. Now, that is a conversation you can appreciate. In return, I simply ask that you hit that like button because I'm going to reveal to you what this line of credit looks like in my own personal bank. But let's get into this by first and foremost saying, why would we want a line of credit, say over something like a credit card? Now, we all know that the interest rate is much lower, but whether you're going to get a mortgage on a property or even go and rent or lease an apartment, they're going to want to look at your credit score and the risk you are to a landlord. So it's literally the preliminary work to getting a mortgage. Before you walk into the bank or even call to set up a meeting, you're going to want two pieces of documentation, and that is 2 years of taxable income, how much you've made. That's going to make a look at how risky you are versus your expenses, things of that nature, and that'll just make the bank decide how much money they're going to give you and at what interest rate. I highly recommend going to multiple banks. I have a line of credit with Royal Bank and Bank of Nova Scotia. The Bank of Nova Scotia one is the one we're going to look at that has the much lower interest rate. The Royal Bank gave me $20,000, but at a much higher interest rate of around 8%. So I always recommend talking to more than one bank because they do operate slightly differently for some reason, which I found relatively interesting. So first and foremost, let's dive down into my own personal bank. Let me show you what this line of credit looks like, because here we can see, guys, I've got about $10,000 here, and you have to understand the day you draw against this is the day you start paying interest on it. It's not exactly like a credit card, even though the interest rate is lower. You do have to be aware as well that this bank could call you on this credit or adjust the credit limit you're allowed at any point in time. So it's always important to understand that you could be forced to pay off your credit at any given moment at any time. Now, obviously, we haven't been through a crazy market cycle like the 2008 financial crisis where the banks would do something like that, but it is always something to keep in the back of your mind. Now, what we want to do is go into the tax documents here. So we're going to documents. They'll actually give you statements month over month to show you what you're paying in interest and everything about that. And if we scroll down, guys, on that document, we can see here that it actually shows me that my current interest rate as of March, I do not have the April paperwork just yet, is about 5.65%. Now, when I got this line of credit, I was only really paying about 3.8%. So clearly it has gone up in this interest raising environment. And these are what we call floating interest rates. Now, credit cards that have about a 20% rate will always remain the same. That is astronomically high. Whereas with a line of credits, they can actually change month over month. They're not fixed. And this can really put a bit of a hindrance if you're looking to use this to, say, make an auto purchase, or you have to fix your house or do something like that. It's kind of annoying that the interest rate could just bump up in a month, which could obviously lead to you having to make higher payments than maybe initially expected. So it's always really important to keep that stuff in your mind. And personally, for me, I always leave a bit of an emergency fund laying around, where if I think it's more prevalent to use the bank's money than my own personal money, I'll leave my money in the bank and then I'll leverage my line of credit, but I'm always willing to pay it off at any given moment. So let's talk about how I've used my line of credit to even make investments into the stock market. Now, back in the March 2020 crash, I actually saw this company called RioCan. This is a REIT, a real estate investment trust that offers a really healthy dividend, and this company fell off an utter cliff. And when I saw this, I realized that the fundamentals of the business weren't really changing that much, and that the company was far too devalued against what I realized it was worth. Well, it was paying a very high dividend at the time. It was around 7%. So I realized I could pay the interest off and still collect about a 2 to 3% dividend over the year, that extra interest rate on the income that this investment vehicle would provide. So I could continue to pay down the debt, the basic interest, let the stock recover back to what I thought was fair value, sell the investment off, and then pay the debt and make a spread on the in-between. What I actually ended up doing was, I liked the investment so much, I ended up just using my own personal cash to pay off the investment over time. But clearly utilizing the line of credit during this time period was very fruitful for the knowledge that I had. Now, you have to understand that that's a big statement there. I don't recommend just taking out lines of credit to go just throw it into the stock market and presume you're going to make an immediate return, because that's usually not how it works. Honestly, I would really only utilize line of credits for generally really use case specific things. For me personally, it's larger payments that I don't want to just pull out of, say, my basic bank account. So maybe if I'm purchasing a trip or looking to do a fix up somewhere, I'll use that credit knowing that I can pay it off sometime probably before the end of the month. But these are different ways that I personally looked at line of credits. In conclusion, whether you like debt or not, if you're trying to build a credit score, get ahead in this world, inevitably purchase a property, rent, or expand your financial well-being, I think it is very prudent to have a credit card card and a line of credit, because credit cards actually offer you a lot of perks. I personally use a cash back reward card that makes me 2 to 3% on purchases. So at the end of the year, all my basic purchases that I have to do, food, phone bills, things like that, I end up making a couple extra $100 a year. And then for the line of credit, I primarily just use it for just about nothing except for large purchases that I'm not really going to be pulling out of my own personal bank account. I'll just transfer them to the card and use the card to make those online purchases. It just makes things a little bit more streamlined. And at this point, I want to pass the question off to you. What is your personal interest rate on your line of credit? How have you found your experience with the banks going about doing this process? And any helpful, fruitful advice for anybody that's looking into this, let us know what you think in that comment section. But on that note, stay cool, stay awesome. And as always, I look forward to catching you in the next one.